Okay, and we should be live now. I'm just gonna check to make sure everything is working properly, and then we will begin. Gotta share this link as well. Check, 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 1 2 1 2 3. Check, check, 1 2. It does seem like I'm a bit delayed, but you guys are just gonna have to deal with that. I mean, my Wi-Fi at home, everything's great. Like, I have my setup. It's just the Wi-Fi on my actual laptop because I use Ethernet. But I guess we could get started. Okay, so this week, like I said, I was gonna start off by just going into the actual price action, what we're expecting. Let me mute myself over here. Okay, so first of all, okay, first thing is just marking out your fair value gaps, right? You want to start from the highest time frame that some confluence exists. Sorry, I was just making sure everything was quiet. Okay, so obviously on the weekly time frame, right, you want to start from the highest time frame that something exists. So here on the weekly, like, the first thing that you obviously do is mark out fair value gaps. On the weekly time frame, it's not the best like price action to look at. What happened here is that we closed over a previous bullish fair value gap that was turned into an IFEG. So at this time in price, if I can go back right here, at this time in price, this weekly bullish fair value gap turned into an IFEG. So if it was to return from this IFEG, then we would expect price to go lower, right? But obviously something on an even higher time frame is drawing price back up, and that was the monthly fair value gap that we were looking at this week. The reason why we were so bullish was because of this monthly fair value gap, right? We already left that monthly range, and we literally ran up every single day of the week. So we ran up every day of the week. There you go. And during the last day of the week, we closed on top of this bullish IFEG. So when a fair value gap is disrespected, the first thing that happens, it goes from FEG to IFEG. And if price comes back and starts referencing that fair value gap again, it becomes a reaper, which just means like it goes back to its original purpose, which is just the FEG, right? So it goes back to the regular FEG. So you can treat it like this. So at first, it's a fair value gap, right? It's just a bullish fair value gap. If it goes down into it, you want to see price go higher. If it pulls down below it, this becomes an IFEG. Now, if it comes back above it like this, as it did here, then this becomes a reaper. And now it's back to its original like confluence of being a bullish, like supporting confluence to go higher, right? So that's what a Reaper fair value gap is, and that's exactly what happened right here in price action. So now we're in the next week, right? And we already opened up and melted from just the start of this week, right? So now we kind of want to scale down because this is the only confluence on the weekly time frame. And this is basically just showing us that, okay, we're still bullish, right? We got another confirmation for a bullish, like, push higher, okay? So that's what we got. We're still expecting buy side. So the fact that it already pulled back for us, like without us even trading, this is beautiful, okay? So what we're gonna do now is scale down to a lower time frame. So now on the lower time frame, remember right here, this is the monthly fair value gap, monthly FVG. And above this monthly FVG over here, we have a weekly FVG. So this is the weekly FVG. And now that we're on a daily time frame, we're kind of just considering, let me change this to a different color just so you guys don't get completely lost. This is going to be weekly FVG. And now we're on the daily, okay? So on the daily time frame, this is going to be like the most important now that the week already opened, okay? So like I said, the understanding is that we're bullish because of this weekly Reaper. It's now a bullish FVG again. Okay, so now that it's a bullish FVG, we're already expecting price to move back from it. Like even from the top of this thing, we would have been expecting it to move higher. But the fact that it's already down here is literally beautiful for us. Okay, so the next thing that I see, I don't know if you guys noticed this, but we had a bearish FVG over here. So I'm gonna lower the opacity on this just so it doesn't get in the way, but I'm gonna leave it there. Okay, so now on the daily time frame right here, we have an IFVG, right? So like I said over here, maybe I should just pin it for you guys so you can remember it. I'm gonna go on a higher time frame so I could find it. There you go. Copy, paste. So I'm gonna leave this up in the corner so you guys can see this the whole time. This is going to be the process, and because we're only looking at FVGs and IFVGs right now, this is what you have to know. Okay, so remember, we're on the daily time frame on gold, XAUUSD. You can pull up the chart and go look at exactly what I'm telling you guys. So here we have this bearish fair value gap, which at this time, after creating this bearish fair value gap, if we were bearish, then running up into it right here, we would want to see more bearish price action, a continuation lower. However, because we're in a monthly bullish FVG and we had war news, right? So there was some Ukraine bombing war news. Because of this war news, gold was again like sought out. It was highly demanded during a time of war when countries invest their currency into a safe haven asset. So that's why we got this insane volatility from this monthly fair value gap paired with that like economic news. Like it was really manipulated at the perfect time. Monthly fair value gap, ton of orders came in. Price was at a discounted like price right here, 2560. And then they're running it back up to all-time highs. So obviously because we're bullish, we don't expect a bearish fair value gap to hold. And instead, this bearish fair value gap would become a bullish IFVG. So now this is bullish, right? It turns from an FVG into an IFVG. Okay, so knowing this process and now the fact that it returned back into it this week, this is now a supporting bullish confluence that we want to see a pullback from. Right? We don't know exactly where it's going to pull back from yet. But then we can look at an additional confluence that we have right here. And what is that additional confluence? That's just a regular FVG that we do not want to see inverted. This fair value gap right here is literally the prime buy of the week. I'm going to be looking for a buy right here from this moment on higher. So it's already in a beautiful spot for buys. Like literally I can open up my account and just layer in some buys right now. Let me title this FVG. Because it's already at a discounted price. After opening, we already pulled back. We have a weekly bullish FVG, right? It's the Reaper FVG. So this is acting as a bullish FVG. We have a bullish confluence right here, and we have a bullish confluence right here. So the weekly time frame is aligning with the monthly time frame, right? Because after pulling up from this monthly, we closed over a weekly and created another bullish confluence, and scaling it down to the daily, we also have these two supporting confluences on the daily. So obviously everything is pointing towards bias. And there isn't much really to think about because what you can do real easily is open up Forex Factory, and you'd realize that Sunday to Monday, right? Right now it's Sunday technically still. It's going to be like midnight price in New York in just 20 minutes. And we basically, these are the only news events. We have CPI on Wednesday and then this bank holiday. So up until like Tuesday's news, a swing position buy from this moment forward is great. Like you can just layer in a small position with a pretty wide stop loss and just swing it until that like Tuesday news. That's basically how I trade to get that like first payout of the week every time. That's how I got my 4K payout. That's how I got the 1K payout before that week. And that's how I also got that 1K payout on the live account from here. Remember that $350 account? Flipped that into like almost 1,500. How did I do that? I simply anticipated that the time frame was aligning with the economic news, right? This monthly time frame for Valley Gap was aligning with the war news, and I was like, okay, now's the time. We got this crazy sell side the week before. We want to see some buy side. So we got that buy side from the monthly for Valley Gap, and we started running it up. So now right here, it's kind of the same thing, right? You can secure a little swing position at the start of the week, especially if you have like a payout condition like me. On Funding Pips, they always do this like Monday. Or it's called Tuesday payday, but it's in Dubai time. So in the case like this, I am looking for buys. 2660. So even from the start of the week, we're already anticipating a retrace from here. So obviously because this daily candle hasn't closed just yet, so it can obviously pull back into here and just stay within this range until this daily candle closes. That's why you don't want to rush into it and wait for like this daily candle to actually close. So tomorrow during New York session, we're going to have a like New York session rally. We might dig even deeper into this, or we might pull up higher first and then come back down. But the whole idea is that we're likely to close somewhere in this fair value gap. And then when the new day opens, that's when we actually get that pullback. People ask like, what kind of confirmation do you need for ICT? Like, do you need market structure shift or whatever? You don't. Like, I never use market structure shift. You don't necessarily need it. All that you need is a solid candle close inside of a fair value gap. So a good example of that is right here, right? It ran down and it closed at the midpoint. Like at or around the midpoint, that's already a confluence. So I didn't need no market structure shift. If I waited for market structure shift and a little pullback right here, I would have never gotten in. It would have never allowed me to get this entry. Like, you have to adapt to price action. Obviously, gold is like this one-sided movement, and you have to adapt that sometimes, especially when it's at a discounted price like this, it's going to be like highly demanded and price is just going to run without you. You have to take on that risk and use this as a confluence. Have a bigger stop loss and use this. No matter how big your stop loss is and how small your lot size was, you would have made money right here. So obviously what we're looking for this week is going to be a pullback higher. So these are the supporting confluences that we have. I'm going to take a quick screenshot of this so I can send it to VIP for this week's outlook. Right, same thing right here. Earlier in the week, we were looking for that IFEG at 2630 to drive us higher, and we did close above it. So this was a early week confluence that we had right around here. 26. Oh, that's the futures chart. So right here on futures, there it is. So on futures, we had that bullish fair value gap. We closed below it, but when we ran higher, we closed over it again on the daily time frame. right? So we got that close above it, and then we decided to run, like price ran higher from this IFVG. So that was another supporting confluence. Same thing on the futures chart though. We have the IFVG, which is a bullish confluence. You want to train your eyes if you're new to ICT to mark out these fair value gaps and see them right away. Like I could see all the fair value gaps right here just because I'm like used to watching them. Look. So this isn't the actual only daily fair value gap right here. If you know what fair value gaps are, you know that there's one right here. There's one right here. There's one right here. But let me ask you guys a question. Why do we expect a pullback from this one and say not this one? Or like this one down here? Because this one, it's still a valid target. Like if New York session this morning, this upcoming morning, decides to run down here, like that's still a valid target. I would likely layer in another position right there. But why do we not look for one right here? Okay, so let me explain it to you now. So like I said, this one can still be a valid target because technically the weekly range is like just barely above this. So if we do actually wick into it, we can still pull back in time for the weekly to close like in it or higher than this IFVG on the weekly time frame. However, down here, there's nothing really supporting it on the left hand side. There's no IFVGs. So this is kind of a lone daily fair value gap right here. Same with this one. So the reason why we use these, like specifically this one, because prices already ran into it and is pulling back. And secondly, there is a supporting confluence. So inside of this big IFVG, there are only 2 daily fair value gaps. So you can kind of like lower it down. But I wouldn't necessarily look for anything on a lower time frame, like 4 hour, 15 minute, 30 minute. There's no need. So on a Monday, price action isn't going to be good, okay? So I can already tell you that. I've been knowing this for a long time. Price action isn't going to be good. But if you can layer in a position from right now, just like this. Like somebody once told me an un-Instagrammable stop loss. I was like, share your trade with me. Like I'll reshare you on my Instagram. And he's like, nah, bro, I just trade like non-Instagrammable stop losses, and like that's how he gets the payouts. Bro recently got a 20K payout. The thing is, like, if you know the bias, right? Gold is literally a one-sided pair. Just because we got a little bit of sell side this like early market open doesn't mean we're gonna run down. We already like ran to the discount of like the entire week. This is literally my most optimal buy right here of the entire week, most likely. I can layer in a position like this and hold it the entire week. I can promise you guys that right now. That if I layer in a position right now, then this position will be profitable by the end of the week. Because everything is kind of pointing to this higher price action, especially if we get good economic like news. So until Tuesday morning, my position will be profitable. Because news can easily like tear us back down. It can easily rip lower and do whatever it wants. We're not trying to predict what news is going to do. We're simply trading before that news with a swing position so that we aren't like taking on the risk. So look, if you swing, if you try to scalp on a Monday, this is you. Cooked. You're cooked. That's what you are. You're cooked. Because you're literally trading that bad price action. You get to feel and taste all that bad price action on a Monday if you're scalping. Because every position depends on a tight stop loss, and it depends on market respecting fair value gaps. Right? However, if you swing on a Monday, you're not exactly risking anything. Because first of all, there's no news, okay? Second of all, you're not risking the bad price action. If your stop loss is big, you know that eventually, like by Tuesday, you have literally like 48 hours until then. A little bit less. But you know that by Tuesday it's going to be a bullish like move, and your stop loss is factoring in for the fact that there may be some bad price action. So when you're swinging, you're not risking this bad price action. You're not even looking at the lower time frame. So yeah, that's what we're expecting. So I already have this bias, this narrative, right? And all that I'm going to do with the rest of this stream is tape read price action on a lower time frame, so you guys can see how fair value gaps work better and understand them. Okay, I'll have these marked out and I'll just leave them on the chart. And we're going to scale down to a lower time frame. I'll answer your guys' questions. I'm going to go grab some water and just like chill, watch the price action, let you guys know what's going on. So obviously on the 30-minute, we don't have much price action just yet. You can scale down slowly, just watching what's happening so far. So this is pretty close. We nearly closed above it. I'm not sure if on a futures chart we did close above it. By the way, if you guys want a futures account, Trade Day is doing a promotion for Black Friday. They said it's going to be the biggest one yet. They've had like a 50% off before. So if this is bigger than that, then it's going to be some cheap accounts. And I've already gotten like 4K payout from Trade Day. 4K in payouts. So they pay out and it's literally like instant payouts. Once the market closes, you can request like every single day. It's not a specific day. Every day, anything that you earn on top of your buffer, you get to withdraw instantly. It's the best payout policy that is out there in like futures accounts. The only thing is that the account is actually hard to pass. But if you buy it for a cheap rate, you can pass it like no worries. Like buy one or like try to pass it within those few days. If you take losing trades, buy another one, honestly. Like it's going to be hard to pass. The rules on prop firms make it so that it's hard to pass. But if you can pass it, that's one of the best accounts to have like out there. Yeah, so this isn't like, it's too risky to say that this is an IFEG. But we can keep an eye on this. I'm going to delete it for now, but we know that we have that. We have this bullish fair value gap right here. And then on the lower time frame, 1 minute. So remember, you're just training your eyes, okay? If you're a new ICT trader, you're training your eyes. You want to understand which fair value gaps to look at, which ones to avoid. So for now, maybe we keep an eye on this low right here. We don't necessarily want to see any more sell side. So if we do take out this low, say during a macro, then sure, we'll use it. But if we don't, the next thing that we would be looking at is this highest fair value gap right here. So we're going to see, we want to see market close above this fair value gap to continue on higher. And remember, we are bullish, just like the first 30 minutes that I was talking about why we're bullish this week. Okay, I'll be right back. We're going to keep an eye on this. These fair value gaps, there's another fair value gap right here. But I mean, if there's this clear like swing low right here, if it does actually dip into this fair value gap, it's likely going to take out the low and go into one of these lower fair value gaps. You can see right here, when we closed above, you see what market did here? We have a bearish fair value gap, which was closed above, becomes a bullish IFEG. You can see that market like filled it nicely. We also have this one inside of this, kind of like what we're seeing this week. Literally, this is what I'm talking about. It's the exact kind of like, I mean, sure, that might look cool. Nah, that doesn't look cool. So this is just a regular fair value gap. Okay, we have an IFEG and a regular fair value gap. We didn't have one right there, but you can see it's kind of similar to what we're getting this week, where we have a double confluence. We close above it, return back into it, tap into the lowest fair value gap, and then go higher. Right? That's exactly what we're looking for. this week, but on a higher time frame. So you can see we already kind of got some nice price action right here. So we can honestly remove this. All that we're looking for is just a pullback higher and a close above this one. I might be able to split my screen to show you guys the higher time frame ones simultaneously. So I'm just gonna try to figure that out before I dip for a second. Yeah, I was just pulling this up, so I was being pretty quiet. Yeah, you can see we already swept these two like little swing lows right here. We're digging into this fair value gap. Let me change the color so you guys can see this a little better. Dang it. I like having it either like green or black, but both those fair value gaps don't show my wicks. Maybe I'll add a indicator so you guys can see the wicks a little better. Okay, yeah, that does help a little bit. So you can see we swept the swing low right here, and we stayed within this fair value gap range, right? So the bodies actually stayed above. And now that we're pulling back, look, we can look at this lower time frame right here. We're about to close above this fair value gap. And when we close above that, that would become a little 1 minute IFVG, and that would support price action pushing higher. Okay, so like you can take the risk after a close like this, you can get into your position, and then the next thing that you look for is right here. If it closes above, you're like, okay, I'll hold my position until the next target. If it closes under, you can close your position early and be like, okay, I'm not risking it pulling back against me. But yeah, so this is our bias, right? We're obviously bullish. And then on the lower time frame, we're just watching the price action. I mean, it's not doing bad at all. This price action is actually pretty solid for a like Monday, early Monday. Okay, I'll be right back. There you go. That's the kind of price action we want to see. So we just swept the low, but you can see that the body still aimed to stay within this fair value gap, right? So even though we kind of wicked below it, all the bodies stayed within this fair value gap. So it still validated it, and we are able to trade a little bit higher. So we're going to see if we get this IFVG right here. Just kind of a little turtle soup. And this also happened during a macro, so it's one of the confluences that we have, right? 1150. We started running down. This is the 12 o'clock close of the 1 hour. And then 110. So you can see we're still getting a lot of sell side, especially like we didn't close above this fair value gap right here. So we're getting some more sell side. Okay, you can see what actually validated this order block is the fact that we got this high swept just now with this candle. So now that we got this, the high of this previous like black candle swept, this is now a valid order block. And then we also have a fair value gap in there, so that would be a high probability order block. The third confluence that we have would be this IFVG once this candle closes in 6 seconds. So 4, 3, 2, 1. And we have an IFVG. So now we might be able to tap in right here and run higher. The next target would be this fair value gap. I should probably change the color of this green one because it's hard to see my green wicks. Or I just change the color of my might just have to do something like this. Those make it a little more visible, but they're not exactly aesthetic. Well, as long as you guys can see the wicks, that's all that matters. There you go. So we got a new IFVG right there. Bang. So now all the kind of bullish confluences are aligning. You can see that we're pulling higher and higher from this daily IFVG right here on the right hand side. So now all the bullish confluences will be used properly to run on these highs, right? And then the next thing, if we zoom out even more, we have the highest 1 week or 1 minute FVG. So we want to be able to close above that one as well. We might get some sell side from this one, just temporarily, because it's one of those A plus setups, you know. If you're bearish, this would be an A plus setup where you sweep a high right into a fair value gap and then you get a little bit of sell side. So on the higher time frame, this is definitely a great scalp. Otherwise, you just chill. We might pull into it right here. Well, yeah, this would be the next target. This high, buy side liquidity, and right above it a fair value gap. There you go. You can see we pulled back right here into this IFVG and we're running higher from the midpoint. That's pretty solid right there. Close above, pull back in, and then running to that next target. Okay, so this is what I talked about earlier. We had this like swing low right here and a lower for rally gap. So we can watch right here to see if we will pull back from this sell side. Remember, what really goes on the lower time frame here doesn't really matter in terms of like the bigger picture, because this is a Monday, remember, and you do not want to be scalping a Monday. You want to be trading with a bigger stop loss, layering in a swing position and holding that swing position like up until that first red folder news. That's when you can start scalping on that lower time frame, trading that algorithm purely. So here we have a bullish for value gap. We swept this low, this swing low, dug into the lowest bullish for value gap, and we might get a pullback here if this price starts reversing from this point. Because we did still get a ton of buy side like bullish confluences, especially right here. Market's kind of showing you that it's still respecting all the bullish confluences. So you shouldn't be scared just because you get a little move like this. This is the exact like example of why a swing position would be more favorable for you. Why are you trading? Especially with like almost a whole R off of a scalp? That's crazy. But yeah, the reason why you don't want to get like psychologically messed up after losing a scalp position is because it could easily wick you out and then run higher. Right? How will you feel after that? When you lose that like RR, you hit your max risk for the day and you can't trade anymore, and then it actually goes exactly where you thought it would. So you do have to be really careful. I mean, it's fine to trade, it's fine to even risk as much as you want, but it's just about not letting that affect your psychology. We can also keep an eye on this next one right here, because even though we wicked down here, if the like candles start closing around this one, then it can just like move up from here. It doesn't have to dig back into this one. I'm not taking any trades. This is a tape reading session, so I'm not actually taking any trades in front of you guys. I'm just telling you guys what goes on so you guys can see fair value gaps being worked, being used. Right here we have a fair value gap, closed above it, tapped back in, got a little pullback. That's the kind of thing that I want you guys to see right here. Swing low taken out, wick into a lower fair value gap, closing around this one, moving higher. See, that's the kind of thing that I'm doing right now. If you want to take a trade, you go back to what I said in the beginning of the stream and look at where gold is going for the rest of the week. And you would be able to target this high, this daily fair value gap right here, and all-time highs again. This is what I mean. This is why you don't want to be scalping, because even though it like follows these bullish confluences, it can give you like a random like jolt of sell side. Take your position out. You're raging because you put your stop loss right here. You got taken out, and then the market goes higher, right? You enter, takes you out, and market goes higher. You already lost 1,000. But if you layer in your stop loss, lower your lot size, same $1,000 risk, but you're not really dealing with all this. The only reason why I'm dealing with all this price action right now is, like I said, so you guys can see it. Because you guys are sometimes too lazy to watch ICT's videos and go mark out the concepts. All you have to do is learn what a fair value gap is and then go mark it out. It's so easy. And the way to find daily bias or weekly bias is to go on the weekly time frame, find the nearest weekly fair value gap, and then you know where the market's going. Look at right here on this daily time frame. Bearish daily fair value gap. That could have been your target from the monthly fair value gap. Boom. From 2.7, like 22 is the high right here. 22 to 2.670, that's 500 pips already. Daily bias. You know that this day is going to dig up into here. Boom. Like, in order to learn how it treats these new fair value gaps, you literally just mark them out. You can see that there was one right here too, and all the bodies. It barely wicked this low. Let's see. You can look at it by looking at open, high, low, close on the top right here. So if you hover your mouse over this candle up here, this purple bullish one, you can see that the low is 2671.31. So 2671.31, and the low of this one is 2671.29. So this is 3.1 and this is 2.9. So this one dug slightly lower than this one, meaning that it did actually tap into this fair value gap. There you go. And now you can see that it actually tapped into this fair value gap. So right here, we have a bullish